Right, there's a note about rules. You're going to have to apply the principles. So what does that involve? It involves two things: recognition and then the measurement. For now, we're focusing on this. Okay, so this week, we're not going to look too much at the measurement. We're just going to be focusing on the recognition. Okay, what does that involve? Well, that involves differentiating between an asset and a liability. Okay, or an asset and an expense. That's recognition. Are you going to recognize an asset, or are you going to recognize an expense? Right, that's what we need to do. We need to know what's being discussed. Am I covering things related to an asset, or am I covering things relating to an expense? See, that's understanding. That's interpretation. The principles don't change. You just need to practice applying them. Policies are how we do things. Okay, so you get an accounting policy. That's not so important at this level. They generally give you the policy, so they'll tell you what you're using. Okay, so it's not so important for you guys. It's just something that you need to be mindful of, that rules are specific to companies, and sometimes companies can choose their rules. Right, so just to mention something that you guys will cover later is inventory. Okay, there are two systems. There's periodic and there's perpetual. Okay, some of you might have looked at this, okay, if you've covered the material already. Okay, but if you haven't, don't worry about it. We'll cover it later on. Right, something as simple as inventory. Inventory is stock that I'm going to be selling. Okay, I can choose the accounting policy. Right, I'm still going to record inventory, but I can either use perpetual or I can use periodic. It's two different ways to account for the same thing. Right, that's policy. Okay, I'm choosing to go this route rather than that route. Okay, it's making a decision. Okay. Disclosure. This is looking at presenting information. Did I write a note here? No, I didn't. Okay, presentation. Layouts. Formats. Okay, unfortunately, UNISA doesn't really give you guys templates. Okay, I will give you guys templates later on when we actually do practical questions, where you guys are going to have to apply what you know. Okay, create the statement, create the journal, create the general ledger accounts. Okay, so you do need to be familiar with what these things look like. Okay, because when you are in the exam, okay, you'll see they just give you a question paper and then line paper, answer paper. Okay, they don't give you a template of the actual statement. You need to prepare that, and that's something that you obviously need to bear in mind, because it is going to affect how you approach questions. Because if you don't know what something looks like, right, then you don't know where to start. Right, if you know where to start, that helps a lot. Okay, that's why disclosure is important, especially in the last few chapters. Okay, where we look at the actual presentation. Okay, the layout and formats. Right, IFRS, this is background information. If you want to know more about the background, read chapter 1 in the textbook. Brilliant. Okay, they talk about IFRS, they talk about generally accepted accounting practice, okay, which is GAAP. They talk about the different regulatory bodies. Okay, the one that I've got here is SICA, okay, South African Institute of Chartered Accountants. There are others as well. Okay, you get ones for auditors, you get ones for bookkeepers, accountants, all of that. Okay, so management accountants, there's a whole lot of different regulatory bodies, okay, where you belong to a body. It's like being a lawyer. Okay, you belong to the, I think it's your, what do they call the, what do they call your professional bodies? Can you think of one? Pardon? Bar Council. Okay, Bar Council. I'm thinking like advocates on the stand. Like there's like, how many advocates sit on the Constitutional Court? Is it 12 or 10 or, is it 12? Yeah, okay. So something like that, you belong to like a body. Okay, you belong to that committee. Okay, that club. Okay, it's like belonging to a club. Okay, so the same thing happens in accounting. Right, you have a regulatory body that sets the rules. Okay, and then everyone needs to follow the same rules. Right, and that's how it works generally when it comes to law as well. Okay, you guys obviously work with cases, but there's the rules that you need to follow. Okay, and then obviously, depending on the application, you decide when to apply what rule. Right, more background, objectives and characteristics of statements. So what makes a good statement? Well, these are some of the characteristics that describe good statements. This is all theory. I've never really seen them test this theory because they've got theory at the back of your textbook to test. Okay, so in FAC 1503, in other modules, so other FAC modules, they do tend to test this because they don't test other theory. Right, for you guys, they test theory relating to trust accounts. They test practices, okay, so practice management. Okay, they test those concepts because it's in your study guide. Okay, in other modules they don't. So what I have seen in these specific past papers is theory relating to the last few chapters in your textbook. Well, I should say study guide. The textbook doesn't have anything about law practitioners. Okay, it's a generic textbook. It's a generic textbook that all the first year accounting students use, okay, at UNISA. Right, so these are just things that relate to accountants. Accountants need to prepare things going concern. Going concern means ongoing. We're not going to close our doors and stop operating. Relevance and materiality, things need to be relevant. So if things are very small, let's say like a small expense. So if I ask you, if you buy a packet of chips, okay, maybe you even bought a packet of chips from the campus canteen, would you have asked for a receipt? Probably not. Why? It's not material. It's a small item. It doesn't cost too much. But if you bought the textbook from the bookstore, would you ask for a receipt? Yes. Why? It's more material. Okay, first of all, it's more expensive, and it's a textbook that has some sort of, let's say, recourse. You might want to go back and exchange it perhaps. All right, you're not going to go back and exchange the cold drink or the chips or whatever you've bought. Okay. Right, faithful representation, things need to be accurate. Comparability, we need to compare either year on year, so one year compared to another, or we need to compare different accounts. Verifiability, that's looking at auditing. Okay, an audit is just a process of verification. Right, where someone who has studied accounting has the behind-the-scenes knowledge in terms of systems and processes, and they verify that things are accurate and things are done correctly. Timeliness, we need information from last year. We don't need information from 5 years ago if we're preparing financial statements. Okay, statements need to be prepared for the last financial year. Understandability comes back to this. The basic elements. Do you know what we're talking about? Okay, so assets, very important. Liabilities, very important. Income, expenses. Right, owner's equity is actually split into two, capital and drawing. So that's actually number 5, and that's number 6. Right, and that's why when looking at financial position, we're going to be looking at each of these different elements. Okay, in accounting, everything relates to the elements. Okay, I can't stress that enough. Okay, I'm going to stress it a lot later when you actually see the rules. Okay, and I'll give you something that can help you remember the rules. Okay, but if I'm focusing on financial position, let's think about this logically. Okay, it makes sense. Okay, it's quite practical as well. Right, so let me ask you, if you had to think about your financial position, what would you be thinking about? Hey? So what determines that? Okay, so if you're thinking about that, what is that entailing? Maybe? Okay, so what would your bank account be to you as an individual? An asset, correct. Okay, so do you agree, financial position, I'm going to have to look at assets. That's something that I would have to look at. Am I only going to look at the assets? What else am I going to look at? Expenses, not for financial position. Okay, because position is as it stands, this moment in time. Okay, so today. Right, so today, what assets do you have and what liabilities do you have? Okay, there's the two. Okay, so you'll see the two definitions here for study unit 3. In study unit 3, they're focusing on assets and liabilities. Because think about it logically. Okay, anyone, let's talk about companies or business, or even let's talk about this room, this venue. Okay, how many assets are in this venue versus the liabilities? Okay, liabilities we won't know unless we have the records in terms of are these chairs and tables paid for or aren't they? Okay, if these chairs and tables are paid for, then the assets would exceed the liabilities. Okay, let's talk about two people, person A and person B. Person A has assets of 5, it could be anything, 5,000, 500,000, 5 million, doesn't matter. Okay, 5. Liabilities of 2. Person B has assets of 10, but liabilities of 12. Okay, now talk to me about financial position. Which position would you want to be in? Person A's position or person B's position? Why do you say A? Correct. Okay, their assets are greater than liabilities versus this scenario where your liabilities are greater than your assets. Okay, see, that's financial position. It's simple. If you want to know what your financial position is, just put a list of all your assets and then put a list of all your liabilities. Okay, that'll give you an indication of what financial position you're in currently. Does the financial position stay the same? No. Because what happens if tomorrow we choose to buy more chairs and tables? Will the assets increase? Yes. If I buy those chairs and tables for cash, then my cash will be affected. Okay, so then I've got two assets being affected. Okay, see, that's double entry. Okay, we're going to discuss that more later on. Okay. If I'm using a loan to buy those chairs and tables, now I've got an asset, which is the chairs and tables, and then I've got a liability, which is the loan. Okay. Are chairs and tables chairs and tables? Yes. Are they assets? Yes. Okay, can I call a chair or a table a liability? No, you can't. Okay, you can't change what something is. Right, that's the nature of accounting. Okay, so if I talk about a vehicle is only an asset. Okay, it can't be anything else. Yes, you might have a vehicle, but you're still owing on that vehicle. See, now you're talking about two things. You're talking about the vehicle being an asset, and you're talking about the loan, which is a liability. All right, so see, you can't change what something is. Okay, it is what it is. Okay. Assets are assets, liabilities are liabilities. We need to know how do we identify what an asset is. So why is a vehicle an asset and not an expense? Why are chairs and tables seen as assets and not an expense? Okay, it all comes back down to basic principles, basic rules, basic definitions. Okay, so just a note here, the financial period is the time period in which is being analyzed. Okay, so obviously we're going to be looking at a period of 12 months. That's the financial year. The basic accounting equation is A equals OE plus L. Notice how I can rearrange this. I can make OE the subject if I wanted to. I could make liabilities the subject if I wanted to. Okay, but this equation will hold true because companies are going to have assets, liabilities, and owner's equity. If you want to, you can add something else here, but we'll only talk about it later. Okay, so maybe just a note for later. You can put capital here, you can put income here, and you can put drawings and expenses. Right, because how many accounts do we have? We've got 6 accounts, and those are the only 6 accounts that you get. Doesn't matter how far you go with accounting, there are only 6 accounting elements. The definitions are very specific, they don't change. You get lots and lots of different kinds of accounts. Okay, so vehicle is one kind of account. Okay, one account. Okay, furniture is another account. Okay, both furniture and vehicles are both assets. Right, so we're grouping it. See, that's why when I talk about taking things back to its element, I want to know what it is in terms of asset, liability, income, expense, capital, drawings. That's what I'm actually asking when I say what is its element. Right, so here are your first 2 definitions. Definition 1, and where do definitions come from? It comes from the rules. So IFRS, remember we spoke about International Financial Reporting Standards? That's what we're talking about. We're talking about the rules. Okay, so what does the rule state? Well, the rule states that an asset is defined as a resource. See, this is the keyword that I would highlight. Because if I want to know what an asset is, the only word that I'm ever going to have to remember is the word resource. Okay, that's the question mark that I need to answer. Okay, if it's a resource, it is an asset. Okay, obviously the definition is more involved than that. It's not just a resource, because then there's room for a lot of dispute. Okay, so they're specific. It's a resource controlled by the business. Okay, so my resource, not your resource. Okay, your resources aren't my assets. Does that make sense? See, now they're being more specific. Okay, so companies that have resources, only their resources are considered assets. Arising from past events, meaning I would have acquired those resources from a transaction. Okay, be it a sale in terms of a purchase. Okay, so someone has sold something to me, I've bought it. Now I've got an asset. Or maybe I was donated an asset. Maybe I was given an asset. Maybe the owner gave assets. Okay. That will lead to future economic benefits. See, that's important, because what does the asset give you in the future? Some sort of benefit. Okay, that defines it. Okay, so keyword is resource. That's the most important word. And then the second bit that I would also highlight is the future benefits. Okay, so I must get something in the future from that particular account. Okay, so does a vehicle give you anything in the future? What does it give you? Transport. Exactly, there's future benefit. Right, that vehicle can be used to travel. Do you agree? Does a building give you any future benefit? Yes, you can use it, or maybe you can sell it later when it appreciates. Okay, another example, inventory. Does inventory meet the definition of an asset? Well, let's ask ourselves the question, is inventory a resource? Yes, tick. Is inventory controlled by the business? Tick. It's our inventory, we're going to sell it. Is it going to lead to future benefits? Yes, we're going to sell it, so we're going to generate income. Exactly. Right, and that's the definition of an asset. Liability. Keyword here, obligation. See, that's the big NB. That's what you remember for liability. So if you want to know what a liability is, just ask yourself that question. Do I or don't I have an obligation? Okay, so if you take out a loan, is there an obligation? Definitely. What is the obligation? To repay the loan. Correct. Okay, so obviously a liability has a longer definition. Present obligations of the entity from a past event that will result in a future outflow. See, there's the key of economic benefits. Okay, so if I take out a loan today, I'm going to have to pay interest tomorrow. That's the nature of the agreement. Okay, so that makes a loan and an asset. Okay, you can't have a loan that's also an asset. You can't have an asset that's also a loan. Right, you can have an asset that's financed by a loan. Okay, because now you're looking at two different things. Okay, I'm looking at the vehicle that was bought using a loan. Does that make sense? Okay, so always identify what something is. That's the key. Okay, that's the key always. Okay, even when we get to the last chapter, okay, well, let me say the last few chapters, because the last chapter is actually theory, so you won't see any of that. Okay, when we get to the statements, okay, the statements are going to give you trial balances, and then you need to know what you're dealing with. Right, so when you see the word vehicle, does the word asset pop into your minds? Hopefully. Okay, later on, we need to practice more of that. Okay, so you need to become more and more and more and more comfortable applying the rules. Okay, applying the definitions. Right, so let me talk about another one. You tell me what this is. Debtors. Do you guys know what a debtor is? Or have an idea of what a debtor is, maybe? Yes or no? You can be honest. Good. Okay, so a debtor is someone who has to pay you. Okay, you're going to receive from them. Okay, debtors will be a chapter we cover later. Right, but let's just think about the concept. If someone owes you, are they a resource or are they an obligation? Correct, they're a resource because you have someone who's going to pay you something in the future. Right, so a debtor would be considered an asset. Okay. You get different types of assets and you get different types of liabilities. An asset is going to be broken up into long-term and short-term. So we don't talk about long-term and short-term in accounting, we talk about current and non-current. That's all it is. Okay, so it's a fancy way of describing long-term and short-term. Okay, what determines long-term? Greater than 12 months. What determines short-term? Less than 12 months. That's the definition for non-current and current. Okay, so within 12 months or outside 12 months. Okay, greater than 12 months. And it only applies to these two. So I can have a non-current asset and I can have a current asset. I can't have long-term income and short-term income. Income is income. Okay, so this only applies to assets and liabilities. Only applies. Right, you differentiate between long-term and short-term for assets and for liabilities. Right, there's more about the accounting equation. Earlier I gave you the accounting equation. Here I've given you more in terms of the different layout and format. It doesn't matter what they give you. Okay, if they give you the first one, if they give you the second one, or if they give you the third one, it's an equation, meaning the left-hand side must equal the right-hand side. Okay, and that's all the math that you're going to do. Okay, there's no more maths other than some equations. Okay, that's it. Right, so yes, there is some maths, but it's not like maths. It's more one equation or two equations. That's it. All accounting transactions will affect the accounting elements. What are the elements? We'll see them later. So far we've covered two, assets and liabilities. Right, make sure you know what the definitions are. Okay, I'm going to keep trying to remind you to remember these basics. Okay, because basics are important. The better you know the basics, the easier the other stuff is. Okay, guaranteed. Right, then there's a double entry rule. You've probably heard of it before. Every debit has a credit. Why? Well, every transaction has two parties. Right, so I'll capture something in my books. The person who sold to me will capture something in their books. Okay, and it's a way to also verify. Okay, because if I've captured it and they've captured it, there's confirmation. Okay, there's a reconciliation. Right, because you can reconcile your books with their books. Right, what do you have? What do I have? And we can check. Okay, for now, we're not going to draw up statements. It's too early. Statements are only going to be drawn up much later in one of the separate chapters. All I want you to do now is to appreciate what these statements look like. Okay, so when I focus on this statement, and it's a nice, easy statement to remember because the word financial position is there. Okay, and we spoke about it. Financial position looks at assets and liabilities. Right, so in the statement of financial position, you are going to see detail relating to the assets and liabilities. Right, there could be more detail in separate notes to the statements, okay, but you don't really look at the notes, it's mainly disclosure. Okay, so how do I present information to users? Well, users want to know how many assets we've got and how many liabilities we have. Can I write down assets and liabilities and forget about the equity? No, I can't, because the accounting equation states owner's equity equals A minus L. Right, so if I'm disclosing my assets and I'm disclosing my liabilities, I also need to disclose my owner's equity, right, because of the accounting equation. It all links, okay. Right, now we're looking at two other accounts. I'm looking at income and I'm looking at expenses. Okay, so these are two other elements. Okay, so earlier on, this slide is NB, okay, definitions. You need to know what things are. Here's another one, NB. And there's only 6 of them, that's it. And there'll always ever only be 6. Doesn't matter, you can be a CA, you can be an auditor, you can be an accountant, a bookkeeper, it doesn't matter, okay? You're only going to get 6 accounting elements and that's it. This is like maths. Okay, in maths you've only got plus, minus, times, divide. Okay, those are the 4 basic operations. Okay, here I've got 6 basic elements. Okay, and they're universal, they never change, they always apply. Okay, and they always apply. It doesn't matter what the question is. I'm always going to ask you, what element are you dealing with? Okay, so if we're doing a bank recon, I want to know what element is being affected. Okay, if we're doing a journal, I want to know what element is being affected. If we're doing a ledger, same thing applies. I want to know what element is affected. Okay, because now I just need to learn 6 rules and then I just need to practice. Okay, it's like driving. You need to know where the gear is. You need to know where the pedals are. Okay, once you know where all of that is, and you need to know where the steering wheel is. Okay, and indicators and so on. After that, you need to practice. Okay, then you need to get in the car and actually drive. Does that make sense? Okay, same thing here. There's 6 accounts, that's it. Then you need to apply it. Right, so what is income? It's an increase in benefit. It's easy, it's simple. There's nothing complicated about these definitions. Just think about it logically. Am I getting something or not? If I'm losing something, it's an expense. Okay, so increase in benefit, income. Decrease in benefit, expense. And that's the definition. It must be during the year, obviously. Okay, we'll discuss why later on. Okay, obviously, accountants need to prepare statements for the 12 months that have ended. If I'm looking at income, generally they arise from assets. Expenses, the same thing. Generally they arise from liabilities. Okay, so if I'm buying a vehicle, what could the income from the vehicle be? Transport, exactly. Okay, a fare. Okay, if I transport people, you earn a fare for transporting them. What could the income be for property? Rent. Okay, something as simple as a tenant paying you. If I'm looking at expenses, let's talk about expenses generally arising from a liability. Not always, but generally. If I have a loan, the interest is viewed as an expense because the loan is the liability because there's an obligation, and the interest is the expense because I need to pay it. Right, so do you see how interest is different to the loan? Interest expense is a expense. The loan is a liability because you have 2 different definitions. One is an obligation, one is an outflow of benefits. Okay. Next bit. Why do companies operate? Okay, some companies do operate only to make a profit, that's fine. Generally, I would go with value first, okay, and then profit. Okay, because value is the why we do something. Okay, the passion, etc. Okay, so why do musicians make music? Because they love making music. They love singing. Right, and because they do so well at singing and making music, they become very profitable. Okay, but when they start, okay, an upcoming artist or musician isn't going to be making a profit. Do you agree? Okay, they're going to be starting, but they're still creating value. Right, so the people that listen to them are still appreciating the music that they're creating, but they're just not generating a profit for doing it. Right, but then superstars, okay, make a huge amount of profit because they're creating lots of value. Right, everyone wants to download and listen to their track. Okay, who's entitled to the profits? Who gets the profit? Shareholders, if you're looking at a company. If it's a sole proprietor, the owner, exactly. Okay, I didn't write that in, let's write it in. Alright, the owner gets the profit. So if the owner gets the profit, how do I calculate the profit? Profit is income minus expenses. Okay, that's how you calculate profits. You take what you earn and you minus what you spend. Okay, what you're paying for. Right, so profit is the difference between income and expenses. Who gets what's left over? The owner. Right, so owner's equity will increase with more income. This is why. Let's have a look at the why. It's always good to understand why. If I'm going to increase the income, what's going to happen to the profit? It's going to go up. If the profit goes up, is the owner entitled to more or less? Correct. Owner's entitled to more. See, that's why. Okay, because the one links to the other. Okay. Let's talk about expenses. If I have more expenses, what's going to happen to profit? It's going to go down. So if profit goes down, will the owner be entitled to more or less? Correct. Right, and these could be like short questions in an assignment. Okay, they generally ask shorter questions in your assignments during the semester because they're multiple choice, so they just want you to give them the answer. Right, it's easier for them to mark as well. Okay. Right, obviously your exam is written. There might be one or two short questions, but most of the time it's written. Again, appreciate layout and format. That's all I'm stressing now. Later on, we can actually create the statements. That's fine. We'll look at it then once we've covered more of the subcategories. Okay, so just to give you some context, when you look at your study guide is literally a compilation of different sections, different units. And then in one of the units at the end of the study guide, they combine all of it into one, which is the disclosure, okay, which is this. When looking at disclosure, I'm looking at presentation. So the statement of profit and loss and other comprehensive income is going to be looking at performance. Let me ask you this. How do you measure your performance? Do I look at things as it is today, or do I look at things over a period of time? Over a period of time. Okay, and that applies to anything. Okay, let's talk about, so they had the soccer over the weekend. Okay, obviously there was some bad news that came out. Okay, 2 people were killed at the stadium from the stampede. Okay, but nevertheless, I'm not talking about that. I'm talking about the soccer match. Okay, so how do you determine the winner from the soccer match? Hey? How many goals they scored, perhaps, but do we look at a specific time in the match? No, we look at the whole 90 minutes. Do you agree? And maybe even overtime or extra time and so on. Okay, but if I just keep it simple, right, the winner of the match is the winner let's say the team that scores the most goals over the 90 minutes. Right, so if one goal is scored by one team, you can't say, well, that's the winner. Okay, yes, they've performed, they've done well, but if I'm looking at performance, I'm looking at the entire 90 minutes. Right, so now which team was the better team over the 90 minutes? Do you agree? Okay, so performance for finance is going to be looking at what? The whole year. Okay, so we're not going to look at 1 month. We're going to look at all 12 months. And we're going to determine how much income and how much expenses did we generate over the 12 months. Because now we can evaluate the performance of the company. Okay, so a company does well in month 1. They sell a lot in month 1. For the rest of the year, they don't even make one sale. Good or bad? That's bad. Okay, a business shouldn't only be selling in 1 month and then not selling in the rest of the months. Okay, then we've got another business. That business sells throughout the year. Every month there are sales. Okay, which business is performing better? The one that's selling throughout the year, exactly. Okay, so financial performance is always going to be looking at this, income and expenses throughout the year. And that's why when looking at layout and format, they're always going to be talking about the financial year. How long is the financial year? 12 months. Okay, and that's why when you look at the statement of statement of comprehensive income, okay, not financial position. Financial position is today. Okay, today, what assets do you have? What liabilities do you have? Here, I'm looking at what did you do over the last 12 months. If you did a lot, you're performing. If you didn't do a lot, you're not performing. Do you agree? Okay, and that's what you're looking at here. Right, the other last two, capital and drawings. What does this relate to? It relates to owner's equity. That's why I've given you an equation here for owner's equity. Owner's equity is whose entitlement? The owner. It's the net worth. Okay, so net worth can also be calculated using this equation. A minus L. Okay, owner's equity can be calculated using two different equations. The first equation is capital plus minus profit or loss minus the drawings. And the second is owner's equity equals, let me change this to owner's equity, OE. OE equals A minus L. There are two equations for it. Depending on the information in the question, we'll decide on which one to use. What is capital? So why is capital capital? Well, capital is money or assets that's contributed to the business by who? Correct. That's important. Okay, so it's always, 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 always by the owner. Same thing with drawings. Money or assets, but not given, taken from the business for personal use by the owner. That's what we're looking at. Okay, so capital is very specific to the owner. Capital is capital. Drawings is drawings. It has a definition. Now we know what it is. Okay, so if you want to know what capital is, you need to ask yourself, did the owner give it to the business or didn't they? Okay, if it came from the bank, then it's a loan. See, that's something different. It's not capital. Capital must come from the owner. Right, and you've got this equation. Earlier we spoke about the calculation of profit. Do you remember what it is? Income minus expenses. Right, so I could substitute that into this. Okay, and that's why earlier I spoke about owner's equity comprising of how many accounts? Capital plus income minus expenses minus drawings. Right, and that's why you've got those 4 accounts, because those 4 accounts 2 of those accounts make up the profit or loss. The other 2 are owner-related accounts. Okay, and then you've also got this one, owner's equity equals A minus L. Okay, so this is relating to the assets that you have compared to the liabilities that you have. Are these 2 amounts going to be the same? Yes. Owner's equity here and owner's equity there are going to be the same. It doesn't matter which equation I use. Right, the business is operating, so whatever the business generates is the owner's. Okay, you could maybe use the asset one, you could maybe use the capital one, it doesn't matter. It's just 2 different equations for the same thing. What is it trying to calculate? The owner's entitlement. That's what we're trying to calculate. Okay, this is the most important slide of all of them in the first few pages of study unit 1 to 4. Okay, big NB here in terms of having to learn and study this. Right, if there's one page that you study well, is this one. Okay, it's the rules. It looks quite complicated with all these pluses and minuses. So I'm going to give you something that I've seen students use in the past. Okay, students have used this acronym to help them remember this rule. Okay, so do we need rules? Yes, we do. Why do we need rules? Interpretation, understanding, the language. Okay, so I've seen students use this acronym. It's DEADLIC, D-E-A-D-L-I-C-C. Okay, is UNISA going to ask you how you remembered the rules? No, they don't care. Okay, they want you to use the rules. All right, so if you want to use something to help you remember the rules, go for it. Okay, by the time we get to the end of the course, I'm hoping that you've done so much in terms of practice that the rules are second nature. Okay, it's like driving. At some point, you don't have to think about where the clutch is, where the petrol is, where the gears are. You just, your hands and arms and legs are going all over the place, okay, correctly, and the car doesn't crash. Okay, with accounting, the same thing. At some point, you guys are going to be comfortable with this, and I don't even need to talk about it. Okay, you'll just know it. Okay, but right now, most of you are probably just trying to get to grips with it. Okay, so this can help at the beginning. All right, so the top covers the first 3. There's 4 words, or let's say letters. Okay, so this is debit plus, okay, expenses, assets, drawings. Okay, then liabilities, income, capital, credit plus. Right, you'll see why I'm stressing the pluses just now. Okay, but that's important. The pluses are always more important than the negatives, because if you know where the pluses are, obviously the opposite will be the negative. So that's what I want. I want to know where the pluses are. And that's the key. Okay, so the key when dealing with accounting is to identify where is the positive side. Where is the plus for all the different accounts? Okay, obviously expense, keyword was outflow of benefit, right? Asset, keyword was resource. Drawings, keyword was owner takes. Okay, that's all the do I know what they are. Liabilities, obligation. Income, inflow of benefits. Capital, giving to the business, contributing. Okay, so I'm just adding that. This would have come from the definition. That you don't have to worry about. Here, I'm only going to focus on this, the rules. Okay, do you know where the pluses and minuses are? Okay, because if you don't know where the rules are, then you won't know how to apply them. Okay, so this week, I'm not going to be looking at application, okay, in terms of how are we going to apply the rules. We'll look at that next week. Okay, so make sure that you do go over the theory, all right? So maybe study the definitions, try to study the rules, okay, get more familiar with them. Okay, then we'll practice applying them next week. Okay, next week will be the first time where we're actually going to be using the rules. Okay, but obviously you need to know the rules first before you can use them. All right, so that's homework for this week. Right, there's a little activity to do, but we'll discuss it later. Most important thing is know your rules. Start studying the rules from today, because once we get to past papers, then it becomes easier to approach questions because you have this at the back of your mind. Right, so I've seen students write that acronym down, DEDLIC. Okay, then they've got everything. Debit plus, so meaning expenses have a plus on which side? The debit. Assets have a plus on which side? The debit. Drawings have a plus on which side? The debit. Okay, so let's look at that. We just spoke about assets having a debit. There's the plus. Assets increase on the debit. Drawings and expenses. There's the debit. Okay, drawings is a nice one that I want to highlight. I should have used red. Okay, drawing starts with a D, right? D for drawings, D for debit. See, you don't even have to learn that one. Okay, the answer is in the word. Okay, you see drawings, now you know what you're going to have to do for that account. Okay, you know you're going to debit the account. It's telling you debit the account. Why must you debit? It's a plus. Expense debit, asset debit. Okay, so the only two that you really need to study are these two. Okay, because drawings is actually given. Right, you shouldn't struggle with getting the rule there. Right, but as I said, the acronym can help at the beginning. Right, if I use blue just for the capital, same thing with capital. The answer gives you the rule. C for credit, C for capital. Okay, so if you want to know what to do to a capital account, the answer is credit the account. That's what you need to do. Then you just need to remember the others. Liabilities are credited plus income, credited plus. Okay, so now I know where the pluses are. If you know where the pluses are, you should be able to just think about the negatives. That's why, don't worry about the negatives. You just need to remember where the positives are. And that's why this is everything, okay, when starting out, because now I can see where those accounts are going to increase, and I can see where those accounts are going to decrease. You can even write it down if you want to in the test. As I said, UNISA is not going to ask you how did you remember the rules. They just want you to use the rules.